Greetings and thank you for joining me at FutureMoneyTrends.com. I'm here with Amir Adnani. He's the CEO of one of the few mining stocks that I actually recommend. He is a business builder, one of the top entrepreneurs according to Casey Research, founder and CEO of UEC, one of only 5 uranium producers in the U.S., and founder and chairman of Brazil Resources. Amir, thank you for being with us today.
That's great. Thanks for having me.
Amir, a lot of people are interested in the mining industry. You're building a mining company in Brazil, listed on the TSXV under BRI. You guys recently had a major development, an announcement. If you could just let our audience know the details of this deal you guys have structured.
Yeah, absolutely. When you look at Brazil Resources, you see a technical team and overall group of people that have the capacity to really deliver on the company's objective to become a midterm gold producer. And so the acquisition that we've done recently of a more advanced project than we had previously really gives us an asset that we can now build around and basically position to become a midterm gold producer. And this is the Cachoeira project, which we acquired from Luna Gold. And, you know, Luna is really a wonderful company. These guys have worked really hard to become the newest gold producer in Brazil. So as a result, we were able to really work out a deal that was win-win for both companies. Cachoeira was a project that was not a priority for them as they were focusing on their producing assets. And I think it's a good vote of confidence that they divested and sold this project to BRI for shares in BRI, which I think really demonstrates their commitment and confidence both in the project and BRI's management to advance the property. And it's a project that comes with just under 700,000 ounces of basically gold ounces in the ground that are 43-101 compliant in inferred and indicated categories. There's good potential for increasing the ounces that contain gold. And I'm happy about the fact that we were able to acquire this at reasonable cost with very little dilution for BRI shareholders. And in essence, then, we basically structured the deal here where Luna has taken shares in BRI, and the valuation on the ounces in the ground here works out to be roughly about $15 an ounce in the ground. That's 1.5. And you look at even the comparables in the sector today, and even with the beating that the gold junior sector has had, ounces in the ground are trading anywhere between $30 to $60 an ounce in the ground. So we've acquired this at a good valuation relative to peer comparables, and have done it utilizing stock, which helps preserve our cash and shows the commitment everyone has to this property moving forward.
Now, with your other 3 projects that you guys have that are nearby, will you guys be focusing on them or as well, or mainly just focusing on this new Cachoeira project?
The nice thing about Cachoeira is that it is situated within the same gold belt that our other 3 projects in this area are basically based in. And this is a very interesting area. This is in northeastern Brazil, the Gold Belt. And it is believed to have many geologic similarities to the West African Shield, where over 40 million ounces of gold has been developed and produced. And this is an area in Brazil where companies like Kinross, Luna, Jaguar are all involved in. And so there's a lot of actual development and mine construction taking place all around us. And so now we have a good base to operate from, where we have our previous projects, which are more exploration stage projects, but a good-sized land position with just about 50,000 acres. And now with the addition of Cachoeira, we add a more advanced project to the mix, which has had a good amount of drilling completed in it in the past, just under 40,000 meters. And again, with the resources that have been defined already, it gives us a base from which we can start to do some of the necessary economics and look at what kind of potential production we could be looking at with this project. Keep in mind, what I really see here is very similar to how we basically, as you pointed out, and I'm the founder and CEO of Uranium Energy Corp. And with Uranium Energy Corp, we basically went from concept to production in 5 years. And we did that because we focused in areas that had good infrastructure, good history of uranium mining in the past. And I see the same opportunity here in northeastern Brazil. I see northeastern Brazil as an area where the presence of companies like Luna and Kinross really helps validate that this is an area where things are getting developed, mines are being built. There's good infrastructure. You look at our Cachoeira project, there's a federal highway that goes right up to the property, access from two major port cities. And so this is an area where when you look at the history of artisanal mining for gold, current mine development by North American companies, this is an area where things are getting done. And I think it's a great place for BRI to position itself, given our goals and ambitions over the next 5 years.
Amir, just so people can kind of get an idea of how the behind-the-scenes look of the mining stocks and mining deals, I don't know if you're allowed to disclose this or not with us, but how long did this deal take? I mean, when you guys first started negotiating to where it was, a press release last week, about how long does something like this take to coordinate and get through both corporate teams and legal counsels and stuff?
These things do take a long time. I mean, they can take months, and obviously, when you look at what we announced basically a share purchase agreement. So we had gone well into basically negotiating a contract that spelled out exactly how we expect to transact. Sometimes you see companies maybe announce a letter of intent or something to that extent, and then agreements have to be drafted after that. But we took a good amount of time to really make sure that we did ample amount of due diligence and get into all the nuts and bolts of the project and its merit, and that can be very time-consuming. But it's the type of investment we need to make in acquiring bona fide projects that could be really developed further. So, this is an environment right now, Dan, where it's been a very tough go for the junior gold companies. Not a lot of deals are getting done because a lot of times companies don't have the financial ability or capital or access to capital to make acquisitions like this. I think what really sort of stands out about BRI is that we have managed to raise money. I mean, just the end of last year, we raised money in December, which was actually a tough month with all the tax law selling that was going on. We raised money at $1.10 per share with no warrants. And so the company has today, as of our last filing, just over $9 million of cash on hand, very tight capital structure with no warrants ever issued. That basically helps, I think, demonstrate that the company does have access to good sources of capital that tends to be very supportive. I think we're probably one of the only junior companies out there that actually has a bank owning its equity. Brazil Invest, which is the oldest merchant bank in Brazil, owns just about 10% of the company. And I think from a standpoint of having shareholders and support like that in a tough financial climate like the one we're in right now, it gives us a unique advantage we can leverage to make acquisitions like this and then have the ability to develop them further. And I think the key is to make acquisitions at times like this when valuations are down relative to their historic levels, because that's how you create shareholder value. You're buying things basically at much more attractive terms.
Now, as far as the entire mining industry and as well as BRI, a lot of the mining stocks have been hit lately. What do you attribute this decline in the mining sector recently? And do you think we're nearing a bottom for most of these stocks, including BRI?
I mean, there's no doubt this has been a very challenging resource market from a standpoint of resource-based equities, as you point out. And obviously a lot of it, as you're aware, has to do with some of the macro developments in terms of the European sovereign debt issues, some of the concerns about whether the rate at which the economies of emerging nations are growing is bullish enough or not, and uncertainties and issues in the U.S. Ultimately, I think the thesis around the urbanization of the middle classes in China and India is really unchanged. I mean, we're basically in a 20-year bull market here, basically a super cycle for commodities. And the fact that millions of people have to basically transfer and come into the middle class status and have access to a lot of the conveniences and lifestyle factors that you and I benefit from in North America continues to really put that type of long-term demand on commodities. And of course, gold is really kind of in a unique position, given that it's not just driven by demand for actual physical use, but obviously the role it plays as an investment vehicle and hedge as well. I think what's really key here to consider, really sort of a few points on why I think we're going to see a strong rebound in the second half of the year, particularly when you look at the gold price, and perhaps then, obviously following that suit would be the gold equities. You have to pay attention to the seasonality of gold. I mean, I think traditionally you see advances in gold during its period of seasonal strength, and you attribute this to all the metal fabricators in India who purchase the bullion to make into jewelry for the Indian wedding season. When you look at a 30-year pattern, you see that typically starting in around August with Ramadan and then leading into the Indian-related sort of holiday seasons all the way to March, February, March with the Chinese New Year. That seasonality is tough to kind of argue against. And I think that's an important component of the demand for gold, because jewelry makes up more than 50% of gold consumption on an annual basis. But you step away from that for a second, we can't ignore the fact that you got negative real interest rates out there. I mean, the Fed is going to continue a zero interest policy until at least 2014. And when you deal with real interest being basically negative and continue to be negative, this just really lays the groundwork for a gold price to climb higher. Well, what I think is key too is really two more points here quickly, Dan, is there was a real flight to the U.S. dollar as a safe haven in the first half of this year, which kind of made no sense, right? Because when you look at the U.S. debt ceiling debate that's coming up, when you've got the federal elections in November, followed by the fact that we still got to confront over $1 trillion of budget deficit, all of this is going to, I think, prove challenging to the U.S. dollar. And so there could, there's pressures that could amount on U.S. dollar, just like they have on other currencies, could really favor the price of gold. But I want to come back to the last point I want to make here, which is the supply side challenges. I don't know if you've seen this or not. I think it was really interesting, a report that came out from Metals Economics Group. And this is the supply side, just the physical challenges associated with mining with gold that, again, we tend to maybe ignore or not look at as much. But this latest report that these guys have put out really shows the challenges that the major producers of gold are facing to replace their reserves, basically, which is the name of the game. I mean, for these guys, they have to replace their depleting reserves. And the real, let's say, easy gold that everyone has mined, I mean, the easy stuff is gone. You have rising political risk. You have rising tax instability. You have rising costs, especially in resource-rich nations. And I think it makes it tougher, longer to develop gold mines, especially when you're talking about these mega-scale projects that the majors are working at. And so I think it creates a real opportunity for the junior gold space, because the junior gold space is basically the pipeline for the majors. And the projects that the juniors are developing is really what, when you look at the majors, I mean, this is what they need. What's so interesting is the fact that the amount of gold in the ground in terms of reserves and resources at a development stage is almost equal to the amount of gold that's been produced in gold mine. And so there isn't that much in the pipeline. And I think when you just look at the supply side challenges alone, that could be enough to kind of see why on a longer term basis, as we look at things like seasonality of gold, as we look at the negative real interest rates, as we look at just the mess that we're in with all the debt issues out there in the world, the sovereign debt issues. This really is, I think, the environment that we're going to see the foundation for rising gold prices. And I think really the seasonality of gold should kick in and translate to some interesting, let's say, to an interesting second half of this year.
Well, I certainly agree with you, and am very bullish on the mining sector. We recently met with Doug Casey. I know you were at his last summit. I know he only invites a few companies, not too many. Are you guys going to be in the Carlsbad one in San Diego, or the San Diego area in September?
Yeah, I'll definitely be there. And we've got Uranium Energy Corp there as basically as a presenter as well. And it's really great to have the support of, Doug is really a legend in the resource sector, and to have the support of people like himself, other people in his organization like Marion Katusa, individuals like Rick Rule, one of their KCR funds, which owns 15% of BRI, has been a wonderful supporter of our company. And, you look at the fact that they're obviously over 10%, so their ownership in the company is all publicly disclosed. And you can see, as recent as 2 months ago, they were buying BRI stock in the market at prices well above $1.30 a share. And, today the stock is trading at 79 to 80 cents a share. And so I think it's important to sort of highlight the fact that we've got real kind of vote of confidence from individuals like Rick Rule, like KCN. And in this business, I think it goes a long way to have the support of people that are well respected and well followed. And I think the fact that they are, such supporters and strong supporters of BRI really makes this company unique in the profile of people that it has around it that are supporting it.
Absolutely. I think that's one of the things a lot of people miss is having a strong shareholder base and investing with the right people is crucial. Amir Adnani of Brazil Resources. You can learn more about Brazil Resources at brazilresources.com. You can even download their special investor presentation. Amir, thank you so much for taking the time with us today.
Thanks for having me.